Hi everyone, Jared Fuller with Nova Home Loans. Just sent you out an article explaining Ben Bernanke's interest rate policy over the last few years and where we're headed now. Really interesting, great information, but I wanted to get you guys this video just to kind of give you my take on it and the shorter analysis and also where I think it may be headed from here. Basically the Fed has kept rates as low as possible, given more clear language to say they're going to stay low as possible for a considerable period of time. Then they took it one step further with quantitative easing, which is large-scale asset purchases. We all know the Fed has been buying huge amounts of mortgage bonds and mortgage treasuries, more than probably ever in history. I think it's at $85 billion a month. They were saying that was going to continue for a while. Then they started to give a little indication that they may scale it back at some point. This was back in May. This was when the word tapering first came out, and I think hopefully you're all familiar with that word now. But the rumor of tapering and the fear of tapering caused rates to really spike up. And the Fed came back, and Ben was trying to explain that the tapering will be based upon economic data. When unemployment hits a certain rate, when inflation is hitting a certain, I guess you could call them trigger, then they'll start to scale back those purchases. But there really is no set timetable. I think the markets all had said, well, this will probably happen in September. Then it didn't happen, and now the traders and investors seem to be understanding that it is a little more data dependent. So rates have kind of stabilized and come back down a little bit. One thing that's not mentioned in that article that I am thinking of is that the Fed may start tapering or scale back on their purchase every month, and it may not really even be tapering. Just because they're buying $85 billion worth of mortgage-backed securities every month, that's been about 60%, maybe 64% of the total amount on the market. So the Fed's been the biggest buyer. But volume has been down, refinances and purchases. So with mortgage securities so much lower, with such a smaller supply, the Fed buying $85 billion, all of a sudden that becomes 90% of the available pool, which, there's some even more risk involved there. So I think if the Fed were to cut back just a little bit and still have as high a percentage, I'm not sure whether that would be tapering or not, or how the market would react to it, but that's something we might want to all keep our eyes on. If you have any questions, I'm happy to speak to anyone. 602-686-9500. Thanks so much, guys. Bye-bye.